Steve, it doesn't always mean a recession's coming, but you don't get a recession without an inverted yield curve, and therein lies the worry.
Yeah, that's pretty much right there, Scott. Let's, we're back on the positive side. We were inverted all morning. We'll be talking a lot about inversion. Let's explain what it is. It's where short-term bonds yield more than long-term bonds. Why is that bad and weird? Well, it's usually the other way around because investors want higher interest rates to lend for a longer period of time. It makes sense. But the 2-year and the 10-year bonds flipped this morning for the first time since 2007. And I'm sorry to say, it's a pretty tried and true recession warning. Take a look here. 3 inversions. You go back to 1985, at least that's what our chart does. They're circled there. And it's pretty much curtain raised a recession by anywhere from 13 to 17 months. Sample small, but every time it's happened, we haven't circled this yet because we don't know if it's a recession or not. Let's take a look at the history of inversions. It shows when it goes negative, it tends to stay negative for a while. 1978 to 1980, that was off the charts. It was the curve was inverted by 241, 2.4 percentage points. 2000 minus 52 basis points, and 06 and 07 minus 19. You can see the length that we were inverted. We go negative, we tend to stay negative. Now take a look at what's expected from the Fed. They're kind of expected to respond here by cutting interest rates. A 100% chance of a September rate cut, 73% chance of another one. Folks, this adds up to 75 basis points of cuts where the Federal Reserve would cut the short-term rate. That could possibly uninvert the curve. Now, some caveats. Don't go running to the bunker just yet. Caveat with a capital C, that is. No one knows if inversion means the same thing today as it did a decade ago because yields are so low right now. In fact, you have the yield curve inverted when the 2-year rose after the president delayed some tariffs. That was a positive development. Plus, Scott, as you know, $15 trillion of negative yielding bonds around the world. So that could play a factor in whether or not it means the same thing this time as it did the past 3 times.